Welcome everybody. This is another edition of Ideas Untrapped Policy Shop. For those who might be attending for the first time, we do this every quarter. So the idea is for the community around the podcast to meet, interact, and as usual, have great conversations. So, and today I have fantastic guest, Mr. Dele Faseemo. He's the divisional head, investment banking and specialized market, Sterling Bank Plc. So welcome.
Thank you very much, Tobi. It's my pleasure to be here with you.
Yeah. So solve one puzzle for me, first of all. You know, I'm in Nigeria. You're a banker, obviously. Banks are, you hear this in Darfur on the streets, banks are regularly declaring profits. I mean, unless there is a bank failure, which is usually very sudden, and of course the subsequent regulatory intervention, Nigerian banks rarely ever have an extended period of losses. But at the same time, nobody seems to be able to get any funding from banks. So what is going on? There seems like there's a disconnect between the financial industry and the
intermediation that we're supposed to do. Thank you. It's not much of a puzzle. I thought it was going to be a much more difficult puzzle to solve. First, let me start from the first principle. And how do I mean first principles? What are banks? What really are we supposed to do? We're just middle men in the first basic level. What do I mean by that? Because the way the economy is structured, first and foremost, resources are not evenly distributed. So you've got a side of the economy where they've got a lot of resources, and you have another side where they need the resources. So what we do is to stand in between, right? First, as a source of trust and credibility, that those who have the resources, financial resources in this case, can trust us to keep safe and manage their resources for them. So we call that the surplus side of the market. And then those who need can feel free to come and meet us. You say, oh, I need, because they can't possibly go meet every individual, every business that has got those resources, right? Or there should be some aggregator, if I can use that word, who is in the middle, right? So that's where, at the basic level, that's financial intermediation. And if you do that fairly well, follow the principles, the guidelines, the conservativeness that is required, you should always make money, right? You should always make money, because you make a promise to this side, I'll give you X, and you ensure that this side who is taking the resources pay a little more than what you have promised to this side, and your day job is done. So we should make money. The scale, the quantum of the money that we make can then depend on the size of the intermediation services that we offer and the creativity that we bring into the intermediation using different tools and other initiatives, right? So now to the second part of your question, which is, it seems that not much of intermediation is going on. It depends on how we look at it. If you look at the data in terms of maybe credit to the private sector and all of that, even if you take away the impact of inflation and devaluation, I think credits are growing, right? Can we do a lot more? Yes, we can do a whole lot more. Are there things that we need to do to ensure that more and more people have access to capital, to credit? Absolutely, right? But that is an ongoing and ever-evolving situation and problem to solve. I'm sure probably in the course of our conversation today, we can get into some of the ways this can be done maybe better, things can be scaled, and we can include more people to gain more access and so on and so forth. But that's really how I would like to start.
Yeah. So if we look at the landscape of the financial industry generally, and I don't just mean Nigeria, let's say maybe in the last decade or decade and a half, there has definitely been some incredible changes, particularly the rise of fintech and other forms of digital banking. M-Pesa in Kenya, and a whole lot of highly valuable companies have rode on the back of that innovation. For people like you in the quote unquote traditional banking sector, how would you describe the evolution of that change in terms of its impact on your industry?
Thank you. Again, I don't know whether I can fairly and describe the institution I work for as a traditional banking institution. We are, to a large extent, but to a very great extent, we actually also play in that space that you just described. I should mention that we were one of those who pioneered quick digital credit engine with algorithm, right, in this market over this same period that you mentioned, right? But I understand the question in terms of what can be a different sub-segment of the financial services industry, particularly the fintechs, like you mentioned. Yes, quite a number of that are taking advantage of the innovations that have happened with technology and financial technology. And there is a dent, there is a shift in the structure of the industry, right? A shift and the structural change has created what can be described as a completely different sub-segment, right? Who don't have to use the brick and mortar system of channel distribution. Even the licensing framework is different. Customer acquisition and onboarding is different. So, what this is because they have been able to take advantage of some of the innovations that have happened over time, right? Today, we are all benefiting from it. Consumer taste has shifted significantly. Back in the day, if you made first and foremost, there was no mobile banking. There was no plastic card to carry around, no ATM machines anywhere. So if you needed to pay somebody, you had to go to the branch, write your slip, draw out the cash, and then give to the person. I always narrate my own experience observing my dad. If he needed a bank draft, had to travel to the state capital, write and submit a letter, and had to wait for 2 weeks before the bank draft would come, because the person who was meant to sign is in one place called an area office, again far away from the state capital. Now we've moved from that to where you go queue up in a branch, you collect early in the morning, go back to your office, come back during lunch hour to pick up your cash and all of that. Now to a point where those who don't even know that we've had this evolution is at the click of the phone, right? The beneficiary gets their payment. In fact, if you don't get your transaction notification before you clicked, that you are already judging that, see, this bank is not performing, right? So that is a major shift, that's a major advantage, and we benefit from that speed and efficiency. Now, how has this affected the entire, what you described as a traditional? Of course, it only has meant that we have to continue to up the game in innovation, right? And in creating new services and in customer service and a number of other areas that mean that to remain alive, to remain in business, you don't want someone who's just starting to eat your lunch, if I can put it that way. But again, like I said, a number of those traditional financial banks are actually involved in this space because we're playing there. Yeah, we're subject to a lot more rigorous, more stringent regulatory framework, customer acquisition, and KYC requirements, which I'm happy is also now getting streamlined because of all of the cyber issues that happened as a result of the lowering of the standards. But by and large, it's been more salutary in effect than damaging, right? It's been more advantageous to everybody, so it's shifting, it's pushing the frontiers and enabling us to share resources, to innovate faster, right, and all of this.
So, what inspired this thing and even this conversation generally is the way I look at it is, despite the changes that were in some measure quite dramatic, like you have described. Like you said, I recall a time when my mom had to pay 80,000 naira in Lagos, and our branch was in Ilorin, and she was afraid to carry cash, so she had to go collect the bank drafts.
Yeah.
Have it signed over 2 weeks, like you said, and take it to Lagos to then cash. But now you can do that in,
because she didn't want to travel with
exactly. So you can do that in 20 seconds now.
20 seconds is a lot now, because if your bank doesn't deliver your transfer in 20 seconds, no, I'm sure you would go on Twitter and say, what kind of bank is it? 20 seconds is a long time right now. I mean, 1, 2, no, you don't want to count up to 20 before you receive the notification that the bank is
very important. So now, my question then is, all of these innovations seem to have solved perhaps one problem, which is payment.
Yeah.
But what's going on with credit? Why hasn't credit seen the benefit of a lot of these innovations generally? To buy a car, buy a house, to do so many other things, you cannot. There is consumer credit in various forms of ways that it can be bundled.
Yeah.
It just seems to be still very, very rudimentary, limited. So why hasn't credit? What are the constraints to the expansion of credit the way we have seen in payments,
especially at the consumer level?
Yeah.
Thank you for that. A number of things. First, again, if you look at the pace of progress, I guess is what we're discussing. Not that there is no progress. I think there is progress. Again, if I use our own numbers as a test case, you can see that, and even industry-wide. But the pace of progress and the extent of inclusion can be improved upon. A number of things can account for that. And again, it will not be exhaustive. For example, if you look at the general economic climate itself, the level of employment and economic growth, because at the end of the day, who is credit-worthy? A credit-worthy person is a person who actually has got income, right? So you don't want to drive financial inclusion with credit when you start lending to someone who hasn't got an income to pay back. So if you look at the general economic level, the state of employment and income distribution, that's a major part of the equation. So the more we are able, again, it can be a chicken and egg situation, because you might say, oh, why don't we leave with credit to create more jobs and people can have income and then they can. It's neither here nor there, but if you look at it strictly from the standpoint of the lender, you don't want to lend to someone who doesn't have that income, right? So as the policy of government improves the well-being and the economic situation, more people become more credit-worthy. They can come into the fold and then benefit from that. That's very important to emphasize. The other thing is that there's a whole lot of market infrastructure and data that need to be pulled. Good enough, teledensity has improved significantly, so there's a lot more coverage even in rural areas today with telephony services. So it's easier to get people's data, right? Because you need data to be able to lend as well. You don't want to lend to someone whose basic KYC information you can validate. Where do they live, how do they move, and so on and so forth. Because I say the credit engine that we built in Sterling already has algorithm to predict and do all of those things. But again, we must make sure that industry-wide this is happening at scale. So data is important. The general economic situation is important. Market infrastructure to aggregate is important, right? Because you want to be able to ensure that if you want to serve 1 million customers who have need for credit today, is there a platform where they can go, right? Just at the press of one button, they can get what they need. This is very important. So I know that very recently the government created Credit Com, which is the credit for consumer credit coordination policy and all that. And I think that part of the problems they're trying to solve are some of these things that I've mentioned. Integrity of data, market infrastructure, and credit guarantees, and all of those things. So I think it's evolving. It's only going to get better. From where we are coming to where we are headed, I think there's been a progress. However, that progress needs to be accelerated, if I hear your question correctly. And if we solve for some of these basic things, it will go a long way to open up the market. I mean, there are bank agents all over the place. Maybe we need to do a lot more to reach out to people, pre-qualify, lower the credit. I won't say lower the credit scoring, because it's gonna be a time bomb if you lend in a way that is not sustainable, because you want every loan you give out to come back. That's the only reason you can actually do more the following year. But things that impinge on people's ability to pay back, this is foundational for credit. People's ability to pay back. And in addition to that, there's certain platforms that are being created, like I mentioned before, where they serve as aggregator platforms for different services, different consumer products, whether they're automobiles, whether they are home ownership schemes, and so on and so forth, where we can actually pool resources. And in addition to this, I think the use of the capital market to create even longer term pool of funds can help the industry, right? So that rather than individual institutions do things alone, things can be done. I mean, recently the government did the domestic dollar bond, for example. Some of these things can happen in the private sector as well, where you pool resources and then you can lend, on a fairly medium-term basis, where the repayment burden is easier, even for those who already have incomes. Because if I go, I don't want to go a little technical, but if you look at the structure of balance sheet today for a number of banks, right? If all you've got is you and I, who are savers and depositors, leave most of our funds in demand deposit accounts, there's limit to how much the industry can deploy that to create value in a sustainable way, right? So, which is why the capital market side of things that I mentioned comes in, where we can actually sell more futuristic, we can let people believe more on a longer term basis in the economy. That's actually what leads to more sustainable capital accumulation that banks can then draw on to create this kind of credits that we're talking about.
Yeah. So describe for me the balance of the incentives of financial sector versus sometimes the barrier of regulation. I don't want to say barrier, but maybe the structure of regulation itself, how the entire industry is regulated, which is then responsible for its oligopolistic structure. Banks are essentially the same. I know that you say Sterling Bank is different.
Our services are
where I'm going with that question essentially is that, so if you look at some of Nigeria's high growth sectors, so we might say, okay, it's not profitable. Like we're talking fintechs, right? A lot of these highly valuable companies, have to still depend on or get started with foreign venture capital.
I asked myself why is our domestic finances missing from that equation? So I understand risk vis-a-vis the growth of the economy, people's incomes, employment, and other risk factors. But what about some of the high growth sectors that we've seen? But because it just seems to me like that the financial industry sometimes can be too complacent, relying on
Foreign capital.
not just foreign capital, but lending or financing industries or sectors that seem safe. Government debts, oil and gas, and the likes. So, what's going on? Why are there not much risk taking, especially in Nigeria's high growth sectors? You see the growth of our entertainment sector, for example, in the last 5, 10 years, from movies to music to food to fashion, right? Of course, we talk about tech, fintech, and other forms of technology that are Nigerian companies. Nigerians are really, really killing it everywhere. But our domestic financiers they seem like they are missing from. Why does young Nigerian innovators still have to go to YC every year to get funded?
Thank you. It's going to be difficult for me to have the conversation on this issue without speaking about us.
Sure, go ahead.
The reason I'm saying that is, as much as I would like to avoid speaking about us, there are things we are doing or have done that could be a template for others to follow. So first, it's not, I wouldn't even say focus on high growth sectors alone. I'll say focus on sectors that are representative of the engine of the economy that can unlock the rest, right? They may be the most risky, they may not be, but they may not be the traditional, like you mentioned, oil and gas and government securities and all of that. They are certainly not the safest. So I'm sure you do know about Sterling's heart strategy.
Yeah.
Absolutely. Health, education, these are the engines of the economy that we've deliberately been focusing on for the last how many years, with direct investments and lending and all of that. Now, one thing we realized is that across entertainment and all of these spaces that you mentioned, it's not so much that capital is not available, but there is a different kind of work that needs to be done, which is organizing the players, organizing the participants in a structured manner that can actually enable them to attract the right kind of capital. It's very important. And you would see in development finance, we talk about catalytic investing and all of those things, right? Those are the things that need to happen. If we get them really organized, I was speaking about platforms, I was speaking about aggregators, schemes. These are the kind of organizing frameworks that we are creating, that the rest of the market is also trying to put together, right? There's conversation ongoing around this, apart from the things that are already being done. So when that level of organizing has happened, I can assure you it's easier for them to actually access capital already, whether existing domestically or which can be attracted from abroad. So as financiers, as banks, as financial institutions, we've got a lot more work to do in helping to organize the ecosystem, right? And helping them to create structures and frameworks, whether it's in governance, whether it's in how the business is structured, and so on and so forth. This is very, very important. In any case, we're already doing that as an institution, right? If you see the models with which we play in healthcare, in education, for example, whether it's we're creating online digital educational systems or aggregating hospitals and hospital management participants in order to break down the cost and make it more available. Because at the end, if you take healthcare as an example, right, access to healthcare is one problem. the average cost of delivering the services is another problem. It's not so much about policy and relying on waiting on government. It's about what we as private sector participants can do, right? And then government can come join us. We can actually influence, advocate the right policy changes to enable the industry to play. So for me, that's how I say that there's a whole lot of organizing that needs to happen, that is already going on, that we are leading across all the 5 sectors that we play in actively, that are strategic to us. But it does require a lot more, participation from the rest of the industry to get this done. But I think again, I remain very optimistic. It's only a question of time that all these things will begin to, come to major fruition that's scalable. I think that's really what's important.
So I mean, to push that question a bit further. So for that to happen, how can you mention a few things that can enable the financial sector lead from the front? Because sometimes, and I'll confess, I don't like this, especially on the side of public policy, where a government agency or regulatory agency or just come up with an initiative and they just hand it over to the financial sector. Okay, yeah, fund this, fund that. How can you better use your leverage to lead from the front and ensure regulation catches up with innovation? I mean, 2 recent examples is the cryptocurrency industry and artificial intelligence, where they are the ones telling regulators how to structure the industry, right? Because they are so far ahead in how they are innovating, how they are delivering products to the consumer, that the government has to catch up. Otherwise, you're just asking for trouble, because this train is already running and it's never late. So how can the industry better coordinate itself to lead from the front, rather than situation where you are at the mercy of the regulator, or worse, in some cases, at the mercy of a single individual who is in charge?
Yeah, you're very right. Because the moment the regulator is ahead and they've written the code, even from the standpoint of you as a business person, you've lost the game. Once they've written the code, they've already predetermined how you can play. There is not much for you to do as an investor, as a business person, as an entrepreneur, or as a financial institution. So again, I go back to the way we play, the way we run some of these businesses we do is we lead, whether it's in agriculture. There are policy roundtable events that we organize. We take our Agri Summit Africa, for example. That's an annual big Africa-wide thing where we are leading the policy conversation, right? Because first, we believe in this society. A lot more of us have to continue to believe in this society. And it's in believing in this society that leads you to trying to understand the scale and enormity of the problems that the society faces, and then being determined to solve the problem. So for us, it's problem solving. Once you're determined along those areas, then it's easier for you to actually even start front load by your capital. I mean, we've seen again that even using whether it's government intervention funds to lead some of these things is not sustainable. We've seen that between the last and the current, and that's really not sustainable, But when you live with private capital, you create a more sustainable financing framework. Government can come eventually, so then you can have a mix of all of that. Now, so in each of those sectors, it's important, and I'm totally aligned with what you have said, that private sector led initiatives are very important, right? Because then the regulator themselves I won't even call it catch up, it's collaborative effort. Because you can't possibly regulate what you don't understand. Otherwise, your policies and all the codes will just be, at best, stifling the business, right? So we do have that ongoing proactive engagement with regulators. if you demonstrate, because they also have their KPIs, they want to solve problems. If you demonstrate that you understand the problem well enough, that you are more committed to solving the problems than just making money, from experience, they will listen to you, they will work with you, right? I think earlier I was sharing the experience of telecoms, for example. I was privileged to be part of that. The submarine cables that were landed and built in this economy were financed by Nigerian banks and other foreign partners, right? And I was privileged to be part of, there was no licensing framework for submarine cables back in 2008. It didn't exist. It was in the hands of the operator to write the code and present to the regulator to say this is how this is supposed to be, right? So these things they've happened before, they can continue to happen as long as the participants, the financial sector understand the problem, are committed to it, and can convince the regulator that this is the way to go.
So I'll go back to like where we started. I think was the second question. I think we can push the envelope of this conversation a little bit. I hope I don't get you into trouble.
I'll try to avoid trouble.
So, on the economy, we know that banks, again, that's a fluid word these days because
Who's the bank?
Exactly, is a bank. Is a bank. Yes, banks are very self-preservative. Sometimes one of the reasons why people hate bankers is there's this common phrase that you privatize the profits and you socialize the risks. When there is bank failure, then of course public money comes into play. But if you need a loan, there's no money. So, but I mean, to be more sensible or informative than such stereotypes and tropes, in terms of how the economy is managed and run, we know that these things matter. An economy that is growing at 7% will have a far healthier, happier financial sector than an economy that is going from one recession to the next, right? How can the financial industry flex its muscle a little bit and on economic policy, right? Because that matters, it's so integral to everything. You can have all these fancy plans, and all it takes is some madman in power who has different ideas, and everything just goes down the drain. So, in terms of how the economy is run, in your interaction with the public sector, your engagement with the National Assembly, not just the folks who regulate your industry, right? Do you think that the financial industry needs to be more influential?
Absolutely. I mean, every industry has got to organize in a way that they can have a voice, right? But you can't have as much voice if you don't have credibility. So building credibility is very important. But let me digress a bit. You said banks are not to be self-preservative or something like that. I think that's natural. That's one of the basic human instincts, self-preservation. It's not a bad thing. Don't forget that we operate in a very regulated industry. The licensing regime, we've got to comply. So compliance is a strong part of how we do our business. Otherwise, the trust that you mentioned earlier will not even be there. The credibility that I just mentioned will not be there. If, for example, you do things in a way that is contrary to the codes or the license that you've got. So compliance is key. So that may be what is coloring to me that banks are behaving in a way that is self-preservative, because you don't want to breach your regulations. The second part of privatizing profit and making losses and the risk, something that the public would pay, I think that's changing. I mean, recently one of the banks was allowed to go, right? So But because the financial services, particularly the banking sector, is such an important part of the economy. Remember how we started our conversation today, that what's really our work? We're right in the middle, right? We are enablers, we're facilitators, and that all of that is built on trust. So both the regulators, the government, ourselves, and everybody must ensure that. So some of the things you see that look like we are making the risk public is what is done to protect public confidence. Because you don't want, once public confidence is eroded, the entire financial space will potentially crumble, and you don't want that to happen, because it affects every sector in the economy. So even the growth agenda, whether it's 7% or 10%, whatever it is, becomes a lot more difficult to achieve. We're driving towards the $1 trillion economy, for example, as a goal, right? You need the financial services, you need that intermediation engine to be alive and running and trustworthy, with public confidence at the topmost level. So that's very, very important. Now, how much voice do we need, and how can we get that voice? For policy advocacy, like you said, it's very important, because we interact with the public, we interact with customers every day, with all the sectors that are important to drive the economic growth. And therefore, we must be constantly engaging with policymakers, with regulators, and providing that information loop and feedback. That's ongoing. I mean, I don't want to talk about the bankers conference or the bankers committee, which is the regulators with the leadership of the industry. That's something that happens periodically, where a number of things are reviewed and spoken about. So when sometimes you see policy announcement, those engagements have happened, whether it's in the fintech or technology space, whether it's in financial inclusion space, whatever it is. There are, even in social impact, we go to that extent, in ensuring that there is engagement that happens. Can more of that happen? Should more of it happen? Absolutely. Again, like I said, as an industry, we've got to have a voice, and that voice will ride on credibility. That is not just profit driven. It's got to be impact driven. It's got to be national economy agenda, right? Because you want sustainability. We talk about earlier we were speaking about, if you think it's not zero sum. So if you think you are gaining, and your gain or your profit is coming from what other people are losing, it's only a matter of time before you start to lose yourself. So the system has to be built from that ecosystem mindset. That everybody has got to win something. It won't be equal, because we don't stake equally. We're not equally talented. We're not equally committed, right? There will be differences, but we must build a system that ensures that there is equity. I don't want to seminize about that, but that's really very important to sustainability of the whole economy itself.
So how much room for politics would you say that you are allowed to do, at least creatively?
You say politics?
Yeah. So Nigeria operates a very, very aggressive license regime. We are in a way similar to what pejoratively called the license Raj in India, in the sense that if you dissent in a way that is not politically aligned with the government of the day, your entire business can be threatened or shut down overnight. And there are times when that sort of political economy is categorically against the public interest. The government can ask you to shut down my account for over flimsy reasons. People can get some form of court order that allows you to, sometimes unjustly, right? And I don't want to believe that has a net zero effect even on your business model as a financial intermediator. Right? So again, my question is, how much politics do you think, because this goes at the heart of everything. So recently, before the refinery drama, Aliko Dangote was complaining about the interest rate, that no economy, the prosperity is not going to happen at
This level
30,
of interest rate.
30% interest rate. But if you then ask why do we have high interest rate, is because we had a regime that was a bit loose with monetary financing and allowed inflation to run away to the point where we then feel we need to tame that with a very aggressive monetary policy response, hence the higher interest rate. So this sort of a cascading effects. And I feel like a political economy where important players in the economy, like the financial industry, just sit down and just live with whatever is handed to them. Um, they can always carve out a very small arrangement that lets them do business without laboring everybody. It's not really sustainable in the long term. So, hence my question: how much politics do you think that the financial industry in Nigeria has the stomach for? Realistically,
I won't even think there is any bandwidth for politicking. It's not, I don't think it's required. What I understand you to be saying is that, again, going back to the voice and the advocacy, how much of the voice do we have? How much of engagement are ongoing with government, with regulators, with policymakers? If that's ever ongoing. You don't have to play politics before you make valuable contribution. Certainly you don't have it. Otherwise you lose credibility. Credibility is very important. If I say good morning to you, you don't want to be wondering whether it's because I want something from you, right? You want to be sure that, yeah, this guy is actually, so it's credible. Let me just remain on that. So that is one part. The second part is, I won't even blame a particular government or regime or administration for escalating inflation or whatever it is. See, inflation at the end of the day, whether you say it's monetary or it's production problem, either ways, right? And it's the two sides of the same problem. If we drive up productivity in the economy, we can likely solve the inflationary pressures. Of course, there are monetary tools and steps that have to be taken to manage in the interim, but at the end of the day, it's a productivity problem to solve. Once we begin to solve that problem, we will get to the end of it. And already you've answered the question about interest rate, because that's the tool that is being deployed to contain inflation, right? Again, that's assuming that the entire problem, for example, is monetary. If the entire problem is not monetary, then you can debate whether pure monetary tools are all we need, or there are fiscal measures that must be taken, right, to solve for the production that I mentioned about. My view is that there are two sides of one coin, and the two sides have to be solved simultaneously. So yes, rather than try to politic, I think policy advocacy and an engagement with policymakers is what I would advocate. By all means, if you think that there is a policy that you think may not be right, back it up with data, right? And you have there's an established channel of engagement between players and regulators and policymakers. It's best probably to use that channel of engagement rather than wanting to sound populist. Or it's not so much of the media engagement, right? That can be bilateral engagement to have these conversations and say, why don't you look at things this way? Why don't you look at things that way? We are in a different kind of situation as an institution because we get invited to some of these conversations. So we've got our voice in the room. And again, it doesn't mean that your voice has to be heard or accepted all the time. But you are in the room, you're always talking, right? You're always engaging, you're always sharing ideas, you're always invited to say, can you lead this initiative? Can you be part of this conversation? And I think over time, it will yield some outcome. So, to your specific question, I don't think politicking is really what should be the game because it's not sustainable and it can lead to a loss of credibility.
so I think this will be my final question for trillion. So we are going through another round of recapitalization.
Yeah.
What are the? I know that a lot of promises have been tacked onto that. It's how we get to $1 trillion economy. It's how we do this, how we do that. But from your own vantage point, what are the benefits of going through this round of recap?
A number of benefits. Remember, we had this 20 years ago.
Yeah.
2004. So if you look at the trajectory of the economy, whether it's the currency rate, inflation, even the need to push the frontiers of the economy itself, right? The interesting thing is that I know for us as an institution and probably some other institutions, we're already in the process because recapitalization, it's not something that depends on government fear. It's something that happens every time, businesses get recapitalized annually anyway. You spoke about profit earlier. So that is something that is ongoing. This is just that the current phase is something that has been triggered by a regulatory announcement, if I can put it that way. So it becomes a requirement that everybody has got to meet. But does it mean that us or other people were not in the process? We were actually in the process before the announcement and all that. And that's one part. Now, in terms of benefit, it could feed into the government's ambition of the size of the economy that we think we want. Because again, it enables the financial services sector, particularly banks, to be more able to lend. I mean, you spoke about lending earlier. That's very key, right? That you can galvanize more resources. And I think I was speaking about the use of the capital market earlier for accumulation of savings and capital that can enable some of these things. So that's very important. The other thing is that, of course, there is a whole lot of innovation ideas. Technology is not cheap, right? So if we continue to remain ahead of the curve, we spoke about the impact of digitization on payment systems, on lending earlier. To be able to catch up with the level of investment, the scale of investment that you require, this kind of capital is very important. The economy, you also have to make provision for the population growth that is forecast for Nigeria, right? So how do we serve a 300 million population, right? How do we become an industry that can serve that complexity in terms of the number of people and other evolving segments that we spoke about entertainment earlier? Who knows what next is emerging, right? So you have to remain resilient. So it's part of building resilience, part of strengthening the capacity of the industry to be able to respond, and not even just to respond, to lead when it comes to capital investment, whether it's infrastructure finance, for example. There are numbers that are bandied about what Nigeria needs as investment for infrastructure. So I don't want to throw around any number, but we can imagine that it's huge, right? So whether it's in education, whether it's in physical infrastructure like roads or in healthcare and all the power, for example. So where is the money going to come from? This money has got to come from this economy and elsewhere, but galvanized, coordinated by banks, essentially. So, recapitalization is very important. It's going to help us push the frontiers, create a lot more employment, be able to intervene in all the sectors that are important for the growth and ambition of government. And of course, it puts a lot more pressure on banks, because then your need for returns, because when people trust you with their hard-earned money, you've got to return money to them. And when people are giving you money to invest or investing in your business, when inflation rates are where they are, you can imagine what investor expectations are today. But again, the challenge for us is to ensure that we have viable investment outlets, right? To ensure that we deploy the capital we're being trusted with safely. That's very important. It's not just for returns, but for safety. So those are the things that I can respond to.
Out of curiosity, how would you feel about a future economy Nigeria and I think Africa writ large, where the financial sector is a bit less prominent, not in terms of profitability now, but so for example, our latest GDP number, 81% of that growth came from the financial sector, right? Even if we talk about employment, the financial sector is extremely overrepresented, whereas the manufacturing sector are struggling from one crisis to the other, whether it is exploding energy costs, collapsing consumer demand, and so many others. So, how do you feel about the future in 5, 10 years from now, where the financial sector is a bit less in the news? I mean, you still make all the money.
I hear you
You
laugh.
know, we don't have this unbalanced situation where engineers coming out of schools are going to banks.
Understood.
Physicists coming out of school are working at banks.
Yeah. There's nothing wrong in those, but and I will explain in a minute.
There's nothing wrong with an engineer working.
I will explain in a minute.
In your foreign exchange division.
No, there won't be a foreign exchange. If you give me a moment, I will draw the connection.
Okay.
You can achieve what you have described if you had if Sterling was the only financial institution. And I will again let me explain that. We're not that much in the news. We operate mostly from the place of embedded banking. So money is money. It doesn't mean anything until you deploy it to solve problems. So if we do embedded banking more as a system, as an ecosystem, that problem will go away. And how do I mean? So today, if I solve your energy problem by putting solar panels on your roof and all of that, that's what you need. It's not money in your pocket. You need someone who can solve that problem for you. If I place an electric vehicle in a packet and give it to you today, right? I mean, out here you have the electric vehicle charging station in this facility that is sponsored and deployed by Sterling, right? If I solve that for you and you make complain less about the price of petrol, I don't need to put cash in your pocket. I've solved a big chunk of the problem that you face today. If I solve for your children's education, right, into the foreseeable future, again, these are the things that people need money to do. So rather than give the cash, rather than lay a lot of emphasis on money, why don't we pay more attention to solving the problems, which is what we are doing. And that's why I said, if it was a one bank industry and that bank is Sterling, then this problem that you describe would naturally go away, because we are focused on solving specific problems. That's how we play. And I'm not saying that because we're having this conversation. I'm sure it's something you already know about us, right? That's why we created the Heart of Sterling strategy, to solve problems in those specific sectors and all that. So I think it gets to a point because a lot of everybody's mouthing ESG, because that's the framework for sustainability. Probably just a question of time. Because at the end of the day, it is who solves your problem that you will bank with at the end of the day. It's not the person. Because even the payment engine, the ecosystem, the platforms is about what are you paying for? You're paying for schools, or you're paying school fees, you're paying hospital bills, you're paying for house rent and all of those things, you're paying your energy bills. That's what most of the payments really are going into, transport, right? So if we all focus on solving the problems, we don't necessarily have to be seen, and that's your point. Banks don't necessarily have to be seen, but everybody should realize that we're contributing to solving the problems. If we get to that point, then we shouldn't have a problem with society liking us or not liking us, because you would naturally like us because we're helping you solve, the problems that are most important to you. That's the vision that we have for the industry.
So thank you very much for doing this with me, and it's a pleasure talking to you.
Thank you very much.
Yeah,
I appreciate your time.
We'll take questions from the audience.
Thank you.
Go ahead.
Thank you very much for Tobi, for hosting this policy shop. and thank you for sharing your expertise in this field. And when I saw the topic, I was wondering, looking at African, financial ecosystem. For instance, we have the African Free Continental Trade Agreement, and we young people, we believe that we are getting the freedom to do business in Kenya, Nairobi, and all that. So, how do we connect with payment system and the issue of dollarization of our economy? How do you see this ecosystem, and what role Nigerian banks are playing? Because, for instance, if you look at UBA, it's getting ground in Africa. So, sorry for mentioning
It's getting
UBA,
what?
ground.
Okay.
Like gaining ground.
Gaining ground, in Africa. So, what are the potential of Nigerian bank or financial industry in, making room for Africa's prosperity? Because I believe that Nigerian financial sector is vibrant, but to what extent is it going to, be a game changer in terms of, payment system on the continent?
Thank you. That's an important element of the African free trade, the thing that you mentioned. There are different components to it. But let me start with whether a bank needs to be physically present in multiple African or other countries. Not necessarily, because you've already even narrowed down to the payment systems. Right? With technology, you can do all of that, and that's the truth. Yes, there's still advantage to the physical presence, but it's not required. Right? Again, that's not putting a question mark on anybody's strategy. Right? You can go to market different routes. That's point one. Secondly, one key element that I think that must be solved, even because we're talking about regional integration in terms of trade, in terms of exchange of goods and services, but we seem to be leaving out one critical element of it: human mobility, which is very important. Because who is going to move the capital? Who owns the capital? Who's going to deploy and use the capital? Is the human person. So today, how easy is it to move across African countries? We need to solve that. The mobility of the man, of the human person, first and foremost. Yeah, we can press our phones and use our computers to make payments and do trades, but if you can't move freely, there's going to be that's a major blocker for me. So we've got to solve that critically. Now the rest will then be leveraging the comparative advantage of each country. Because at the end of the day, what are we trying to achieve with that is to enhance intra-Africa trade. Right? So today the data shows that Africa trades more with the rest of the world than within itself. Right? So we need to enhance that. I believe that's the main objective of that integration. So can we build on the different advantages that are present across the different markets? Can we allow people to move more freely? Then we can then start to leverage around payment systems, which are already happening anyway, right? So I think with time this will go on, but I will really lay my emphasis on human mobility and each country being ensuring that they develop themselves, because at the end of the day, you want to be independent before you can start to drive for interdependence. Otherwise, the body will skew heavily more on one side than the other.
Okay, for me, to further that question and answer. So, where is the conversation happening for this mobility? I saw at one time, I don't know who hosted that conference in maybe Rwanda. Dangote was there with the Total guy talking about, I think Africa CEO Forum, where they were talking about this mobility thing. It's an issue, really. And where is the conversation happening? I know that is happening. So in terms of the financial industry, this is a huge opportunity in a way for you, like you said. So how are you pushing that conversation along? I don't see the conferences. I don't see where this is happening. I don't see the policy for that, for this migration thing, that, okay, opportunities would emerge for you and every other people. And if it's that important, what do you think should be done? How can this industry lead that conversation?
Well, I know there are different fora, platforms, groups, different roundtable conversations. Maybe they just need to take more center stage, right, and be more openly available to the public. As an industry, there's a PAPS payment system conversation that is going on. I know that Afrexim Bank and the rest of are driving all of those things. So yeah, a lot more work needs to be done. If I hear your question or your comment correctly, but a lot of these would also be driven by the different sovereign states, which is why I was speaking to the mobility and because private sector can only try much. These are call it international trade policies of different governments or different countries.
So how are you even trying to make that happen within your own country? Because I hear you with that each country, I understand that even sometimes with the way it's structured is such that different regions, the ECOWAS, there's the East Africa, there's the Southern Africa, and even into the after. So how are you, this industry, even having that conversation in your own country? Because Nigeria is huge. I mean, if Nigeria gets it, I think it will be good for Africa even.
Absolutely.
But it doesn't seem like we're even trying. We put everything on this skyhook. It will happen. I want to see how. What are we doing? How do we want to make this happen? Do we have a timeline? Do we have this goal for ourselves and things like that? I really want to see how.
I know as recently as maybe a month or two ago, there was some Afrexim Bank led conference here in Lagos. I hope I get the timeline correctly, but not too long ago. So those conversations are actually happening. Again, I concede that they need to happen more often. More parties need to be involved. But we'll get there, because the thing about trying to solve problems is that there are problems, if you leave unsolved, they will compel you to solve them eventually, right? Whether it's population growth control. By control, I don't mean limiting growth, but even exploiting, right? And all of those kind of things is very important. So whether it is sharing resources and infrastructure, there are situations that will naturally come. When COVID happened, the kind of collaboration that happened globally, right, was probably unprecedented. Yeah, it didn't happen at the beginning and the way we wanted, but eventually it did. So certain things would naturally force us to ensure that this integration actually happens, because that is when the economy becomes really jump-started, if I can put it that way.
Hi, my name is Majid, and thank you for your time and doing justice to the question the narrator have been able to ask. My own question is about, at the beginning of your interview, you were talking about giving access to there are certain people that can be given access to funding. There are people that can afford to pay that, first of all. Now, secondly, towards the last part of your interview, you were talking about solving problems, which is very important. That is not about the cash, it's about solving the problem. If you put an electric car in someone's hand, you solve the problem. If you're able to put solar panel on someone's roof, you've been able to solve the problem. Now, the question is the question is focused on Sterling Bank, because Sterling Bank is, Sterling Bank can pioneer this problem solving in the industry. I believe that other banking like Citibank and the rest can follow suit, or perhaps they've been doing that regardless. But maybe Sterling Bank is going to follow them. Now, is Sterling Bank championing this thing, like solving this problem, and also in the area of housing? Is Sterling Bank working with maybe a private organization, or Sterling Bank is doing a project or partnering with the government to solve this problem, and not just saying, oh, we can do this? Are they doing it? Now, in the aspect of providing funding for small scale and business owners, because you said funding needs to be accessible to people that can pay back. How about people that want to start a business, but they don't have to pay back the mint yet, but they want to start the business and the business is viable? How do you encourage people to come forward and present their viable business plan to you so that they can actually have those opportunities to pay back?
Yeah, that's a very important question. Let me start from the last one. So when I say that lending goes to those who can pay back, it's true.
Right.
Now, again, I also say it's not about putting cash in people's pocket.
Yes.
That's also something I strongly, the view I strongly hold. Now, it is one thing for an individual to already have an income and they need credit. But you know that what people really lend to are ideas and prospects. That's what lenders give money to. If I lend money to you today, it's not just because you are employed today. It's because I've looked at you, you've shared some data with me. I can reasonably judge that you will remain in employment or you will continue to earn income for the length of the time that we're going to be in that marriage.
Right.
So we lend and invest in prospects and in ideas. The same thing will be true for SMEs or anybody who's trying to start a business. So you share your business idea with your financier and you sell the idea. That's what the pitching is about. And I buy into the idea. Even if it's at best it's paper today, right? But you've sold it to me. I've shared the vision. I've assessed your capacity to execute. I've looked at your history of discipline and focus and character and all of those things. And then I can learn to it. So that's happening. Right?
With
So
Sterling Bank.
absolutely, that is happening.
Right.
Not, I won't even say with Sterling alone. That's at the bedrock of lending.
Okay.
Nobody will lend money to an idea or a business whose prospect is unclear, right? There is an element of risk there. That's what we call a risk asset in technical language. It's an asset, but it may come back, it may not come back. But before I part with the cash, I must have reasonably judged that the probability that it will come back is higher than the probability that it will not. So that's really how it works. That's on one part. The other part is whether we're just saying this as hypothesis or theory. No, we're not. I already spoke about what we call the HEART strategy in Sterling. HEART for the human heart, HEART, standing for healthcare, for agriculture, for education, for renewable energy and transport. We've been focused strategically on these sectors for several years. We're a leading voice in this space. We don't just say it, we do it, we walk the talk. When you were coming into this building, you would have noticed the electric vehicle charging station out there. That is we walking the talk, right? Somebody will say, but how many electric vehicles are on the road? So why are you putting a charging station? That's part of what we're doing. That's part of what is so unconventional to do. To say, can the infrastructure lead the adoption? Can we incentivize, right, the adoption? Go to our head office. It's solar powered, right? We did that because we wanted people to see that what we are saying is doable, it's working, right? So we're deploying our capital to do this. We're creating the ecosystem. We're organizing the sectors, most importantly, right? For the longest time, we've had the digital marketplace for renewables, whether you're a vendor, you're a buyer, you can go there with credit engine where people can actually get credit scores, right, and borrow and do. So all of these things are happening. If you go to healthcare, we're partnering with state government for drug distribution, for example. Without you knowing it, we were involved more critically than everybody knows in COVID, in those platforms, testing platforms, and all of that. So these are the things we're doing to enable these different sectors in a way that is not just about talking about it, but actually leading, actually deploying capital, grouping people, creating platforms, aggregators, and all of that. Yeah, that's at the core of how we play and how we solve problems, rather than just say I'm a lender without actually solving problems.
One question. Okay. Yeah. Good afternoon. Good afternoon. My name is Gandhi.
Yes.
I think we've spoken before.
Oh, really?
Which one of us? You will not remember.
I'm sorry.
Great to be here. So very interesting conversation. So where I'm going to take it from is, when we talk about financial industry, it's not just banks. We have Fintechs. We have other players in capture, right? And I think one very key thing this is like very key part of the conversation really is the thinking for instance, for a traditional bank around what the state of the market is, the thinking of the fintech. It's always different, right? If you're asked I think that what is the next level for financial inclusion, they will say something different from what the traditional bank would say, right? Likely we believe that, for instance, that we've unlocked payments to a better extent, and fintechs are now building innovation, building verticals on payments. So you see somebody set up a food delivery startup, it goes with a delivery startup. What is firing that? What's firing that innovation? It's still payments, right? So it's very critical to really understand how traditional banks, even though Sterling is not exactly a traditional bank.
Thank you. I mean,
how you guys think.
I've tried to say that.
I do understand because I've got to interact with Sterling a couple of times, so I understand what the thinking is for Sterling Bank. But it would be great to really know that what for traditional banks should be the thinking in terms of the next level of prosperity that we can unlock for the market, right? In terms of innovation, in terms of service offering, and how are we able to communicate that thinking to other players, in the market? In this case, it's like, fintechs, because banks and fintechs don't really have the best of relationships.
They don't get along.
Don't really have
That's a nice way.
So I will not say they don't get along.
Not
So I was trying to just say it's not the best of relationships because there always be issues with KYC compliance. Even how banks really think about the place of fintechs in the market. But again, there's an opportunity for everybody to come together and collaborate. So the question is two questions. One is, what for you is the next level? What's the next phase of prosperity that we can unlock in the market from the perspective of the traditional bank? And how can we communicate that thinking to other players in the market, particularly fintechs that banks don't really have the best relationship with?
Okay, I mean, a number of premises that I probably should try and correct. First, that banks and fintechs don't have the best traditional banks, and it maybe to some extent, but the truth is there is a lot more cooperation that is going on that you probably see.
How much of that cooperation is willing other than
The money point is in your lunch.
See, how do they settle their payments today?
So that's my point. It's like,
Do you understand what I'm saying?
is the cooperation not forced?
How do they? Do you know the extent of API exchange that goes on? It's not forced.
Okay.
It's not. Elaborate exchange of APIs. How else do you carry the card I've issued to you to go and use the POS terminal that you just mentioned? It's because there's integration. It's because we settle for them. So there is more cooperation going on than what people see on the outside, right? And in an institution like ours, where you should stop seeing us as a bank, because remember, we're now even a financial holding company with ability to do a lot of things that we're already even doing anyway. So where you are sitting, where we're having this conversation today, it is a bank. This building, used to be a branch of a bank. Do you know where the branch of this, do you know where that service point is today? Do you know where it is? What do you know that it's actually still there? This is a banking hall for all you care. So these are the things that we're redefining, right? These are the things we're redefining. Again, this is coffee shop, this is co-working station, this is all things rolled together. This is probably a banking hall. So to your point, this is the way we think, and we think different. We deliberately dare to think different and to act different, because that is when we can then validly go to the market space and say we represent that vision that you have spoken about, the next frontier, the next phase, the next opportunity for growth and abundance, and whatever it is. Something is important. It's going to be difficult for me to pitch to you to say, give me money or invest your money with me, for example, if I have not shown you the outlets that I'm going to deploy the money to, and how I'm going to return your money to you back with the return or the profit that you desire, right? And how else do you deploy capital than to solve problems? Because when you solve problems for people that they will pay, they will be happy to pay, right? To pay the price, the right price. So you've got to determine who is best placed to solve the most critical problems for the society, right? And that is probably the party that you want to invest in, because you know that once they solve the problems, they're not just solving it in one sporadic way. They are organizing the sector, they're putting people together, they're creating the framework and structure around it. It's very likely that, but accumulation of capital is something that is important to do and achieve in our economy, right? It's very important. And a lot depends on how much, again, people believe in the future. Otherwise, everybody just leaves their money in savings accounts and current accounts. It's actually a measure of the faith, the confidence that we all have in the economy. That is when, if I bring you an instrument and say this is a 15-year instrument because I want to finance a power plant or a refinery or a road project, if you don't think that Nigeria is going to be here in the next 50 years, you're not going to invest in that instrument. Do you understand what I'm saying? So that is very important. So we have to get to that point, and then that fits into how we're able to accumulate capital that will then be available to lend to infrastructure projects and the rest of it.
All right. Questions?
So you said something, and it was interesting. I think you kind of asked my question about lending to businesses, but talking more macro or policy-wise about I want to just get the quotation right. You said one of the banks was allowed to go.
Okay. That was my expression, right?
Sorry, I wanted to make sure that I actually got it exactly what you said.
Okay.
What are the implications of that? What does that mean for the banking sector in Nigeria? It's like Unity Bank didn't file a Q or H1 or annual reports for 5 years or something. What does it mean when one of the banks was allowed to go? What is the signal being sent? What are the dynamics behind that in terms of banking for Nigeria? And particularly, you brought up something about the idea of banking as a facilitating entity and also as a store of capital and a vector for returns. What does one of the banks was allowed to go mean in that context?
Okay, even though I smiled when you repeated what I said, it's one of the most unpleasant events in any financial sector when the bank fails. Because some people have lost hard-earned money, life savings. That's one problem. The other problem is that some people have lost jobs. The other problem is that it's a portion or a part of the confidence that is required to sustain the work we render has also been lost. So, with every sense of responsibility, it's a very sad event when any bank, whether it's a small microfinance bank or as we used to call them back in the day, community bank, fails because it does something to the psyche of the banking public. They are not sure whether it is still okay to put their money in the bank. That's the truth. And the particular one that we're speaking about, I had association with my institution. So again, it's also personal, right? However, I don't have all the details because it's the regulators that have all the details of why a decision was made eventually. Why it wasn't made earlier, or why it couldn't have been made later, or why a different decision couldn't have been made. They are the ones who know, and we've got to respect the decisions they made.
Do we?
Absolutely. The reason I say we've got to
belong to heavily regulated boys club.
Pardon?
Because you belong to a heavily regulated boys club.
Is that why I said what I
I'm
said?
saying, otherwise, like, if people make bad decisions, often one can say, this was a bad decision. You're an expert in this.
Yes.
I have an opinion, and my opinion is that was a bad decision.
To have let the bank go.
Right? I moved all my money from Fidelity and every tier 3 bank.
So you saw what I was saying.
Stories that touch.
So you understand when I said that it takes something away from the confidence. You could have moved your money from bank A to bank B because what you really wanted to do was to move your money from the entire system. It's just like it wasn't possible for you.
Yeah.
Do you understand what I'm saying? So that's why I said it's such an unpleasant development. However, we don't know everything that the regulators know. We have to concede. We can have opinions. I may have an opinion as well, right? We can judge it differently. But you have to respect the person who has the totality of the view. Absolutely. That's the truth.
Okay.
You have to. And the fact that they made a decision in this way for this and this way for another, again, I can't question that. I don't know what they know, right? So if the only time I can categorically judge that decision is if I know 100% of what they know. But as long as there is some part of it that I don't know, I can just say maybe not. Why? That's all, right?
Yes. Now.
I don't know if I answered your question, but
Maybe. But what does the bankruptcy law say about that? Because that opacity is what actually make people lose confidence. People can make decisions if they have access to the facts, and that is what bankruptcy law does. Everybody knows what's going on. People that can.
What's bankruptcy law? They revoked the license.
Really?
That's that is the it's
so it's not even that the thing was
really about what about.
It wasn't
I'm not trying
the bank was
to. You
struggling.
came in on a Saturday afternoon. Grateful for your insights. I'm not trying to.
No.
I'm not trying to stress you.
We can stay on this.
I'm
for
not
the
trying to
longest
stress
time.
you
I
out.
understand that.
I'm just saying.
I understand.
It's rare to have this opportunity with a senior banker to talk about something that is so. Like, I did want to talk a little bit about. My parents run businesses for years, and many people who. My question really should have been about what is banking apart from property banking?
How do you make it participant?
Like, every time you want to go, you've been like during Shola, we have 2 hospitals, 8 clinics, but every time you want to go to the bank, they say, okay, I could bring the COO.
Okay.
I think we've been banking with you for at least we put in every day for 20-something years the current equivalent of 300,000 naira into your bank. Why do you have to bring the deed to get a loan?
Again, so I was speaking earlier about solving problems, creating partnerships, organizing the ecosystem. These are not technical financial speak, right? But it's at the core. One of the sectors we focus on is healthcare. I'm not saying that banks should not ask for collateral because it's one of the. You spoke earlier about preserving ourselves and not. There's something we call the 5 C's of credit. I don't want to turn this to a classroom, but it's important that you observe all of those things to avoid failure, to avoid your license being taken, to avoid depositors losing their money and shareholders losing their money. You may want to be innovative, aggressive, and all of that, but banking is such a conservative business that that if you miss one of those 5 C's, character, capacity, collateral is one of it, capital is it, and the condition, right? Those things are foundation to lending. If you waive one of them in different forms or shape, you would most likely run into some problem. Now, you don't have to insist in a particular form, but just make sure that your lending has all the elements so that the money can come back, so that you can return the money to the depositor and avoid a situation where the license is taken away. So it's a long conversation. It probably can require another session to talk about this. But at the end of the day, the creativity that we bring to it will depend on the focus, the strategic importance of the partner you're working with, right? To say, when can't I finance your expansion? Because I've known your business for this length of time, right? And I've already known your character, right? I know where you are headed. It's a sector that I believe. It's not everybody that will finance every sector. Everybody has got to choose what they are comfortable with. It's important. Because in banking, we say, don't finance what you don't understand. These are principles that we operate with. If you don't understand that, you learn to it, you're most likely going to lose money. When you lose money, your bank runs into a problem. What the public sees is mismanagement. And probably the management has embezzled money. It's not every bank that feels that people have embezzled money.
Yeah.
It's just because people are trying to sometimes find a way to work around problems. They didn't structure it well, it becomes a problem. And then, by the end of the day, somebody is suffering. The whole ecosystem is suffering. When a bank fails, the entire ecosystem suffers. Even the regulator suffers. Because now we can call their decision to question.
Yes.
Now, who goes to jail if such a thing happens? I'm just asking.
We've had instances of bank CEOs go to jail in this market.
Yes.
It's not something that hasn't happened before.
It has.
I didn't like that.
Yes.
Exactly.
Yeah,
Nobody liked it.
So you can stay on which side of that.
I didn't like how that was done, but okay.
So you can see in that instance they probably didn't liquidate the bank, but somebody has got to pay for something. Whether it's the shareholders, whether it's the management, whether it's the
So what does NDIC do? They
Right.
collect,
So what-
they collect premiums.
what NDIC
Like, I don't understand wiping out the equity shareholders.
the equity shareholders would they are the last to get paid.
What's it? But
If at
so
all.
you wipe out the equity, right? And then you guarantee the deposits. Because as you point out, there were people you wonder what they were thinking, but retirees who
lost money.
that runs real foods, right? Like and her father had that was his bank.
So what does NDIC do? Nigerian Deposit Insurance Corporation. So what NDIC does
They collect
primarily
premiums.
is to insure depositors' funds such that when a bank or if a bank goes under, right, that insurance policy can kick in. But as in every insurance situation, there is a limit. There's an insured sum.
I understand.
So the question we can ask is whether, and today insured sum is maybe 5 billion or something, is very little based on where the economy is today.
Yeah.
But if you knew where it was many years ago, you would know that that's the big ship.
Yeah,
Tomorrow
it
we can-
was 250,000.
You understand? So maybe it can be taken out. But again, why is it said that low? Because first and foremost, the interest of the retail smaller depositors, the poor people, are the most important. Sorry, I don't mean to say that monies belonging to wealthy people are not important, right? But
Because money belongs to wealthy people are the vast majority
of people. But if you were going to save somebody, you want to make sure that you save those at the lowest rung of the pyramid first. It's debatable, but I'm just explaining why. Because again, can you possibly take an insurance policy that goes all the way to £1 billion for everybody? For
Yes.
We should.
Maybe we
That's
should.
the aim.
So when you do that, I agree that it's possible. I agree that it should be explored, right? Banks pay the insurance. It's a major expense line on our business that the public doesn't see. NDIC insurance, right? So sometimes when people say, "Oh, why is interest rate like this on deposit? Why is interest rate like this on loans?" There is a whole lot in between. This is one of it, right? Does it address everything? Not yet, but should that limit be taken up perhaps so that again can boost confidence better? I consider not. Right. So essentially that's what so NDIC would then move in they will liquidate, right? And then begin to share the process of the liquidation to depositors, which is where collateral comes. Because if you have lent all your money without collateral, there is nothing to liquidate or to sell to get liquidity back, to give back to the depositors. I hope you can see the connection between all of these things now.
It poses the part of the problem that we have, which is that there's almost a structural limit to the usefulness of the Nigerian banking system. I'm not saying like yes, so that I can just go to a shop now and pay. Yes, it's a perfectly fine transaction. But almost as you say, you would have to be mad to save it.
Yeah, again, this is everything is work in progress.
But I'm trying because I know you have a very specific mandate and like an expertise in Sterling. How do we break the Gordian knot? How do we get past the everybody has a bank, everybody has a bank now? Maybe if you have property, you can borrow. Like how do we get?
Do you know that it's not everybody who has got collateral that will get loans? There are people who don't have collaterals and get loans. Character is the most important.
But what's the ratio? Yeah.
Not just relationship.
Relationship.
Character. You can use relationship to describe character, but character is the totality of the person. Your profile, what you've done, your credit history, right? Your trustworthiness. Some of these things are sounding like what do you call this, abstract,
Yes,
but the truth is that the lending framework has questions, has things to use as yardstick to judge whether somebody has them. For example, if somebody is litigious, just unnecessarily litigious, every little thing they take in their bank and to court, even though they've not borrowed money, right? Again, I'm not saying don't go to court because that's part of the financial system anyway, part of the checks and balances. But you have to find out why is this person just so litigious, right? It may be a yardstick. It may be one of several yardsticks to gauge. This person has borrowed money in the past, and do they have the habit of paying? There are people who come to you to borrow, right? And then you flag, oh, you have a bad loan somewhere. Oh, then they rush to go pay. That's a red flag, isn't it? Why do you have to wait until you need to borrow another one from me before you pay another one that is overdue? So these are signals that can tell you, well, so even if you bring me the best property in Banana Island or in Victoria Island, if I check you out and nobody is speaking, character reference is not panning out right, you're probably not going to get the loan. That's why I said those 5 C's, some element has to be present across them. So it's not so much about collateral alone. Call it name lending. There are people who there are structured financing solutions that may not even require that type of real estate collateral. It may be a structural collateral, if I can use it that way, that protects everybody involved within the project. There are different ways. Again, I don't want to talk this through a technical class, but it's very important that our work is conservative, is a trust work, right? If we keep losing money, and to your question, if you check year in, year out, you check my financial statement, and you see that I keep losing money to bad loans, it would affect your confidence in me. It should affect how much you want to trust me with your deposit, because I'm not being a good steward of your either capital or the deposit you've given to me. You want to be sure that you are depositing your money with an institution that is not losing money or not losing money, in a very reckless or habitual manner. Where we all do lose money one time or the other, but you want to make sure that I'm not just that institution that is not careful enough to manage resources. That's very important.
Yes. You keep talking about capital deepening. I think you call it something accumulation.
Yeah, capital accumulation.
So I term it also, maybe it's different from capital deepening, but accumulation and all that. And I'm thinking, how do you do that without some appetite for risk? Like there has to be, it's a conservative industry, I agree, but on some philosophical level, I think there has to be this when you're able to push the boundaries of what's possible despite it being conservative. So I look at maybe what you said. I think about AIG and the level of insurance it takes and how it affords those other institutions to take risk, and then put money. I'm not saying things don't fail, but I'm like, we are not even, and which actually to what Timmy was saying, we are so down here, and I think we should at least be trying to be that way. I understand protecting the bottom of the pyramid people, it's absolutely important, but we also know that, of course, we think about returns with people that are putting their money, they need to get returns. But then we also need to, the same way it applies to people that are coming for loan, also applies to the way banks should think about doing things and providing returns to their own investors. So I think there should be some, and I think the kind of investors you have, but I know most of your money don't even, most of the money you invest don't come from depositors' money, I think. So I'm like, there has to be this ambitious, thinking from the industry. And I'm like, if we don't take risks, if we don't maybe go big on some things where, even if you fail, you can't fail badly. You can only fail one way, not the other way. If we don't have that appetite for such things, and then it takes whatever it takes, government policy, getting the National Assembly to pass bills, whatever it takes to do it, and then just go big like that. I think, what is that appetite? We need to see it.
Yeah.
Well, yeah.
If I can quickly, just briefly respond to that, you can't even do banking without being a risk taker. So first, the business is risk taking. Otherwise, the problem that the public complain about will remain, which is there is no intermediation going on. And so if I collect deposits and I promise you a certain amount of returns on your deposit, I have to deploy the deposit. And the basic principles, we say the higher the risk, the higher the returns. But everything is within a horizon. Everything is within a threshold. You also don't want to go overboard. If it's too risky, then that return will never come. So our work is every single day as we wake up and sleep and wake up, we're striking a balance between the right amount of risk to take, the right amount of returns to. So that's the work. And so there's risk taking going on every single day. That is banking, that is lending, right? That is investing, is risk taking. But because you don't want to, if you take it back to what I said last, you have to remain trustworthy. You must not be reckless with risk taking. It must not be blind risk, it must be calculated risk. And I'm sure there is the clear world of difference between risk and uncertainties. The risk is you know it, you can measure it, you can dimension, you can assess and mitigate. Uncertainty is a completely different thing. You don't go there. Otherwise, that's not banking, that's gambling. So we are not gamblers.
When you mention risk, I look at the American ecosystem where we had risk takers like Lehman Brothers, AIG, you mentioned it. And you also mentioned during the conversation that corporations are ahead of the game than regulators. So to what extent I don't want to target Sterling Bank. The Nigerian banking system. How much are you pushing ahead so that we reach that level where the Nigerian banking system can influence the whole of Africa's financial industry? To what extent are you pushing that agenda?
It's a never-ending journey, I must concede, because as you solve one problem, another one may emerge, or the scale may change, the dimension can alter and all that. But I think we're pushing. I mean, you were the one, or one of somebody mentioned what one bank is doing in terms of expansion to the Africa expansion, for example. A number of Nigerian banks who have done that fairly well. That's one way. The other way is even things that we're doing to solve the Nigerian domestic problem. You mentioned earlier that if you solve Nigeria, you probably have materially solved Africa.
Mhm.
So if we have a Nigeria focused strategy and solve some of the most fundamental problems, you would have impacted some of the things that we have done as an institution, right? You will be amazed how much international recognition it has brought. That people, whether they're multilateral agencies or even governmental representatives, come to Nigeria, they want to see us, they want to speak to us. And this is not just bragging, but this is real. They want to see, why are you doing this? How are you achieving it? How can we support you to scale? And one thing we always tell them is that we're not looking for somebody else's money to start. We're never doing that. We always lead with our own capital, right? If you want to partner with us, it would be to scale it. And speaking about risk taking now, because you can go out there and just want to get other people's money in order to take the risk. No, that's not our operating model. It's not. So yeah, these are the things that we're doing to technology. I mean, I don't even want to speak so much about it, but there are things we're doing today that the impact it could potentially have on African banking sector is bigger than we are even thinking about.
Thank you. Sorry.
I don't want to go into that.
Yeah, I think we are running out of time.
We are out
We
of
already out of time.
time.
But I have something. What I mean about maybe
We are
going to go.
out of
All right.
time. So no. But I mean, there are so many. There are so many regulars here. So this is primarily a community event. So even after this, the conversation can still continue. So I mean, feel free to network to each other, and thank you, and we'll see you again next time. So
All right.
thank you, Mr. Dele.
Thank you so much. It's
Thank
been a
you.
pleasure.
Thank you
I've
so
enjoyed my
much.
conversation with you.
Thank you.
Thank you very much.
Thank you. Thank you.